today we kind of want to put product against product, okay? Today we want to do a little back and forth. Lucas is a bit of a HELOC guru, all right? Jose is the MCA guru. So today we want to have them, kind of sword fight it out a little bit about which program is better and in which scenario you should take each program. So I think this is a good segment this evening, and I think you guys are going to enjoy it. Let's talk a little bit about speed versus cost, okay? Obviously, we know that an MCA can get done very, very, very quickly, and an MCA also gives you access to capital. But HELOC does that as well. HELOC is also, we can get done fairly quickly.
Pound for pound, HELOC wins 100% of the time, right? Because the HELOC approvals are much higher than MCA approvals. If you take a $100,000 MCA, it's going to take you 2-3 days to close. The same speed that we can close the HELOC. There's no appraisal, no tax returns. So it's just as fast as the MCA, just a bank verification, and they can get you approved. And also the interest rate, it's much lower than a 3.0 or a 1.3 or 1.4 or whatever buy rate you're paying on MCA. Well, it's not daily payments, it's monthly payments, 5-year draw period, and 30-year amortizing.
Damn, you're going to go pound for pound.
What you going to say about that, Jose?
No, he's 100% correct, but what if they don't own a home? So that completely removes you.
What if they don't own a business? They only own a home.
What was that?
If they don't own a business, they only own a home.
So how much money do they need? Well, listen, there's a lot of different things, because if you don't have a business but you have a 680 plus credit score, I mean, listen, there's funds out there, right? If you want to start a business, 100% you can get, but it does cap you. He's right. It does cap you as far as how much money you can actually obtain. We've been successful to get up to $150,000 in some cases without having a business, but you have a 680 score. The bank is now tightening up a little bit more as far as business lending, so that number is starting to drop. So I would agree with him 100%. If you do own a property, the best option, pound for pound, as he put it before, is a HELOC, because you're going to have access to more money. The time frame in which he's mentioning is really what gives this product more of advantage. If you have equity in the property, the benefit of this is that you don't have to show tax returns. You can close in as little as 5 business days in some cases. I would say on average, anywhere between 5 business days to 10 business days is what I've been able to see, as long as there's no title issues, right? You don't need an appraisal anymore. They do an AVM. So only if you want to challenge the appraisal, that becomes a different story, which you are able to, from my understanding, with a couple of these HELOC programs. So yes, I mean, I would agree. If you have property, the best option is a HELOC.
We broke the MCA guy.
Damn, Jose, like you're supposed to be fighting for the MCA. You know what? I'm gonna fight for the MCAs.
First rebuttal.
I'm gonna fight for the MCAs real quick. Okay. First off, I think the MCA is a better option. You want to know why? Because with this particular HELOC Express program, you need to use it for a business purpose. You can't use it for just anything. In MCA, they really don't care what you use the money for. Go ahead. You want to pay off your credit cards? Go ahead. You want to remodel your house? Go ahead. With this HELOC Express program, again, ladies and gentlemen, specifically, it's for business purposes only. It's got to be for a business use. Okay? Also, if today's Thursday, guess what? If Charlie, the pizza guy, needs money for payroll tomorrow, HELOC ain't going to help him.
But he might not survive tomorrow because he's paying 6 months of thousands and thousands and thousands of dollars more. Yeah, so he might break his bank.
Yeah, who's gonna use a cash advance to go ahead and pay off a credit card? A credit card is it's an APR. Why would you use a cash advance to go ahead and
payroll? He said
no. I'm just saying, like in general, because you can't take this HELOC Express program and go ahead and pay off your credit cards. It's not what this is for, ladies and gentlemen. Disclaimer. I'm going to put it up top. You have to use the HELOC Express for a business purpose only. That's not really what an MCA. Do whatever the hell you want to do with the money, dude. Just make sure you pay that shit back. I mean, that's kind of it. So where I would say is for restrictions of what you're going to use the money for, MCA has no restrictions, dude, as long as you're going to go ahead and pay it back.
By the way, MCA, it's purchase of future receivables for your business. You can't just do anything with the money, bro.
You could do anything with the money
tell that at the funding call. Let me see if they're gonna fund you. Oh, I was thinking of going to Vegas.
But
Can you get the wire in today? Because I was thinking of going to Vegas tomorrow. How's that funding call?
No, listen, bro. All I'm saying is that the MCA, you do whatever you want to do it as long as you can pay it back. To be honest, we all know that. That's why people just say working capital. Yeah, whatever the hell I want to do with my capital, as long as it's working.
But I think that's the problem sometimes. And listen, all the lenders that actually watch it are going to leave comments like crazy. If you're using my money to go ahead and refurnish your bathroom or your house or your home, whatever case it may be, there's not going to be no return on the investment. You're not going to be able to pay the money back. Right, I think that's foolish for someone to go ahead and take it. Now, you're right. You can grab the money and do it for whatever it is that you would want to. We would assume that what you're telling us is 100% correct.
Correct.
At the same token, I can say the same thing about a HELOC, right? It's you have to use that for a business purpose. No one verifies, no one checks, really. But it's taking your word for it. I'm going to use this to do this. So I guess it goes both ways, right? Because you can say, hey, listen, take a cash advance and pay off your credit cards. I'm trying to let you shine.
All right. Well, listen, you know what, Jose? I just had to give a little, listen, ladies and gentlemen, this is all just for banter. Obviously, if you're going to take any kind of funding, you use it the way that it's supposed to be used. So if you say that you're going to get a HELOC, use it for the business purpose. If you're going to get an MCA, obviously use it for a business purpose. I'm just saying, because this product is a little more scrutinized, you would hope that if someone's going to go ahead and take the HELOC Express, that they're going to use it for what they say it. But, not everybody does. We hope that you guys are out there staying compliant. I'm just saying there's really no compliance with the MCAs. That's all I'm just trying to say. No one cares really. They just care that you're going to go ahead and pay it back. Whereas the HELOC Express, obviously business purposes only, you would hope it's a little more regulated, that people are doing what they want to do. Does that
No, I agree with you. You would hope. You definitely would hope.
Yeah, you would hope. So now, do you guys think that, with that being said, is an MCA more of a lifeline MCA guy, or is it a trap?
An MCA is a lifeline. The reason why is because, think about it, it's alternative lending. It means that you've already tried to exhaust all of the options, and someone is willing to take a chance on you. They don't look at your credit score. They look at your receivables. No one is going to approve you for a cash advance if you cannot afford it. And the reason why is because they look at a certain percentage of the revenue, but they also look at a certain percentage of daily balances. Remember, it's unsecured. No one's going to give you money thinking that you're going to default, so then they can go ahead and not get their money back, right? There's no collateral. Contrary to a HELOC, right? Your home is collateral. So an MCA, most people that say it's a trap is because they do not use it properly, right? They say they're going to use it to working capital, but then they use it for something else. That's when it becomes a trap, right? And you're not using it correctly, or you're not using it where you're going to have a return on the investment.
Yeah, but you know what? I can say the same thing about a HELOC though. Then, right? So you guys, because we're not just going to dog. I'm not going to let y'all just dog MCAs up here, okay? But how about this for you guys at home? Have you guys ever heard? Is using your home for anything smart? Or is that dangerous? Because I always was under the assumption that you never risk your home for your business.
Exactly. The true question is your wife going to be okay with you taking an MCA or taking a HELOC, right? Tapping in the equity on your property or tapping in the equity of your business? That's the real question.
Yeah, it is a sensitive subject. I've had a few clients that
the wife, bro.
It's, does my partner need to know? Right, whatever partner that is, my partner that's on the
fun fact that I found out once we started doing the HELOCs, I found out that in Texas, it's illegal for you to get a HELOC or a second position or any type of mortgage if your wife is not present. Did you know?
No, really?
Crazy, right? Because what they're doing, they're outsmarting the system. I can tell you offline because you might want to use it. So what you do is, you get a HELOC because you don't need the spouse signature. Yeah. So you just get a second position in your home, and then you file for divorce, right? Or if she's filing for divorce or something, before the divorce papers come in, you get a HELOC, and then when you go to split, like, oh, you want to split the 90% non-equity that I have over here. So they were cashing out. They were cashing out on everything, and then like, all right, you want to split the bill over here?
He's right.
There's no cash for them.
It's called theft of equity. And definitely that's also something that, especially in Texas, and I had to learn that a little bit of the hard way, where there was a client that did not want his wife to know that it was going to, that she had to be present when the notary came home to sign the documentation. But in the state of Texas, whoever it is, your spouse or whoever else is on the deed, not just a spouse, because I can have a business partner, let's say on the deed, whoever else is on that deed must be present, and they do have to acknowledge that you are using the equity in the property.
If I'm married, but my wife is not on the deed, does she need to be present?
She still does.
Because she's on the deed?
You're right.
No, she's not on the deed.
Oh,
Because she's married to me.
Your wife, yes.
Yeah.
So two differences. Good point. If you're married, your wife does.
that's why he's the HELOC guy, bro. You see?
If you're married, then yes, your wife has to be present. If you have someone that is on the deed that is not going to go on the mortgage, that person still needs to be present. Or not the mortgage. I'm sorry, the HELOC still needs to be present to authorize that you are able to go ahead and use that property.
Daryl, does your wife need to be present on the funding call for the MCA?
Absolutely not.
It's encouraged not to be.
You would hope that she's far away from those scenarios. No, seriously, guys. I told you guys a couple of months ago I had a deal fund, okay, and the guy's wife she seen the money hit the account and she threatened to divorce him, and this guy returned the money the very next day. So. Make sure your wife knows about some things. You know what I'm saying? Because if she sees the account, sees some money going into it.
Can you imagine this guy taking a HELOC then?
I speak to only business owners. I don't get any other leads. I speak to business owners just like you guys out there. And I'm also trying to offer them home equity lines of credit, because what is going to be good is, a business purpose can be towards paying off cash advances, trying to alleviate, some of that cash flow. And as we all know, banks and, no one's really paying off cash advances anymore. So this home equity line of credit express product that we have is amazing. I think it's a no-brainer. Yeah. You figure the majority of business owners, you would assume that they own a business, they probably own a home. And, no one wants to refis. The market's not really in it for refis right now. Rates are kind of high, and a lot of people got sick deals during COVID. So listen, you don't want to touch your 4, 5, 3% rate, whatever it is, cool. Take this home equity line of credit. Pay off all your cash advances, and get some of your cash flow back. Now, you know what I wanted to ask you guys though? Do you guys think it's fair to only give people access to money for 5 years, but then make them pay for it for 30 years?
Yes.
You think that's fair?
I think that's fair because the market is too volatile. So 5 years is long enough for you to have the draw period, and then after that, whatever is left over, it becomes a term loan. I think it's fair. And then if you wanna pay it off after the 5 years, you can get another HELOC or someone to refinance and buy it out.
Now, is there a prepayment penalty if you want to just pay it off after 5 years?
It's a revolving line of credit. There's no prepayment penalty at all. It's revolving. The thing is the idea behind it is you take the money and you pay it right back, and you have access to it again. So, no, there is no prepayment penalty.
After the revolving period is over. Mm-hmm. After that 5 years.
If you don't have a balance, you don't have anything to pay. If you have a balance and you want to pay next week, it's fine. They want their money back. Yeah. They're not in the business of trying to foreclose on you or try to take advantage of you.
Got you.
The reason for the 30 years, it's actually a good thing because the 30 years minimizes their payment.
Yeah.
Right? Because they can take a 10-year term, 15-year term, 20-year term. A 30-year term is just going to make the payment smaller. Take the 30 years. Even if you can afford a shorter term, take the 30 years because you don't know what's going to happen. So there's no prepayment penalty. You're only forced, or your debt is a small payment. That small payment, if you have more money, pay it off. You pay it off, and then that money goes towards principal, right? So definitely a 30-year term is better, in my opinion, than taking something shorter, even if you have the ability or the funds available to pay it off quicker.
These HELOCs are interest-only payments?
No. It's a principal and interest payment.
In the beginning of the plan is like mostly 99% is interest. So if you're just paying interest and the principal there, it's at the beginning of the stages is just minimal. Amortization is done when you draw.
Oh,
so every time you draw for 30 years. So if you pay back, you still have the same payment, right, Jose? It doesn't lower the payment. It doesn't reamortize. Or does it?
It depends. You have to pay back 10% or more of the balance in order for it to be able to reamortize.
Gotcha. Okay.
So if you had $100,000 out and then you pay 90% or more than $10,000, it will reamortize at the payment.
Cool.
So it's gonna create a new 30-year plan.
So
Or
now,
whatever's left.
so now, would I be able to apply for another HELOC?
Right after it, yeah.
Okay.
I mean, you can apply up to 3 positions on your primary and 2 positions on the investment property. The HELOC has been around for a while, but I think why people are investing so much on it right now is because the debt is in all-time high, meaning like the consumer debt, right? So
Yeah.
credit card usage is crazy. So all the unsecured lending, they took a hit. Like all the banks, they stopped giving out those crazy credit cards. Now it's all relationship banking, and they seen that the unsecured money is not that profitable anymore because a lot of people are in default or about to default. Price, everything went up, and the salary didn't increase at all.
Yeah.
Everybody kept making the same amount of money. So everybody's already spent all the savings that they had, and now they're up to the credit cards and they are maxing out, and they see the numbers, so they know. So the only safe way of putting money out now is if they have a collateral, and that's why they're banking so much on the HELOC and creating all these crazy benefits for it, because they know that once you get the HELOC, brother, if you have 100,000 HELOC on the last day of the 5-year draw, you're gonna withdraw the whole 100,000 and you're gonna keep it. They're banking on it. They're banking that everybody's just gonna max it out and hold it for 30 years.
That means that the banks are making money, right? Because everybody's got so much money out.
Yeah, but the default rates are also an all-time high.
through the roof.
Yeah, so the only safe bet for them is having a collateral that they can go after if you default. It's not their ideal world, but even amortizing in 30 years, the payment's lower, and then they still have the collateral if they have to foreclose on you.
You have to remember that definitely whenever you're putting up something as collateral, it's always going to beat something that's unsecured. Always, especially looking at the time frame, right? Looking at how long you have as far as a repayment. A cash advance on average is 6 months, right? On average, perfect scenario, you're able to get. I've seen 2 years, etc. But let's talk about 6 months. Let's say that the client is better than average, above average. A year. Compare 1 year to 30 years. Big difference, right? But what you need is collateral. Most people would say you only take an MCA if your business is in trouble. I disagree with that because, just like I said before, the only way you're getting a cash advance is if they evaluate your bank statements. They look at your bank statements and there's money coming in, and then they're going to give you a percentage of your of your daily balances, right? If you have a lot of negative days, you're getting declined, right? And that's what the biggest misconception is. But it's difficult to put a unsecured product against a secure product because a secured product is always going to be better unless there's certain key points, right? You don't own a property, or you have a low credit score. Let's say you own a house and you have a 580 credit score. You're not qualified for a HELOC, even though their minimum requirements are 600 for a primary.
But there are HELOCs that you can qualify for, right?
For with a 580 credit score?
Yeah. A HELOC is like a
I think what you were
home equity loan.
With a 580 score.
Yeah, with the 500 score.
This is why he's the.
Oh, I know what you're. Okay,
Not a second mortgage, but a loan on your equity, and they put a lien on it.
Correct.
Now there are those options. Now, what makes us wonder now, because the banks are way too slow. Now, are they intentionally too slow? Because we seen the HELOC popping out, and they are super fast. So are the banks intentionally slow?
I think that a lot of them still have to do a lot of checks and balances. Even if they are slow, they're slow because they're not up to speed with technology. Where, you can comparing a HELOC Express option with a traditional home equity line of credit, even if they use an ATM, they don't have a title, even if they go ahead and don't require all the documentation, tax returns, they're still behind when it comes to title, right? That's the biggest bottleneck. Because banks are tightening up, they are taking a very long time to provide updates. Not even updates, even just to get a hold of the client or just underwriting. And because there's such a high demand now into business lending, the underwriters are clogged up, right? There's a bottleneck with just providing an approval. I've seen a big difference as far as response time from the back office, when you submit a deal to a bank. on the HELOC Express, it definitely pushes it where you're getting access to capital much quicker if you obviously have a home. What's better, an MCA or a HELOC? Depends on the situation. If you have the collateral, you have the ability to go ahead and use your equity in your property, hands down, take out a home equity line of credit. If you don't have a property or your credit score is below a 600 on a primary or below a 680 on an investment, a merchant cash advance, as long as you have revenue coming into the business and you have a plan of what you're going to do with the money.
The real mistake is what you using the money for. If you're choosing financing based only, you're going to be making the most expensive decision because the MCA is always faster. Now, you might not be in a position to take a home, a HELOC, might not be in a position to take a term loan from a bank. So you have to fall back into an MCA. It's not a bad product if you know how to use the money and the money is making you money. So I think both options are valid. I think for a business purpose, I would go even with the MCA before I'll take a HELOC. HELOC will be the last resort for me.
Follow up on the programs, understand the guidelines, and see you next week.
By Brokers Connection.